Don't know yet, let me remind you, tomorrow, May 9, we have earnings coming up for the first quarter of 2022 when it comes to AMC. So AMC is going to release, those earnings, but I want to share with you what I believe could be, behind on the tail of these earnings. Is it going to be something that will actually break the actual pattern and send us back to whatever any price above the 14 or the 15 we're kind of pinned on still the last 3 weeks, or is this something that could potentially lead us to go back to $5 a share? All right, let's get into the details of this earnings preview. All right, so as you can see here, earnings preview is telling us that AMC should have some good earnings coming up when it comes to the revenues. All right, since its meme stock glory days in June last year, shares of AMC have dropped 76%. No surprise. Even so, the stock soared so high for the entire 12-month period through Thursday's close that the stock is still up 56% year to date. All right. Now, in March, AMC acquired a 22% stake in a struggling gold mining, Hycroft mining company for $28 million. I mentioned this on a video I posted yesterday or the day before yesterday. AMC also indicated that this could be the first of more investments in distressed assets. Now, about quarterly results coming up Monday. Just 9 brokers covered the stock, and pretty much none of them is actually calling on the stock to be a strong buy or a hold, or actually pretty much everybody is selling a sell, but that is not the matter here. The matter is the first quarter revenue is forecast to be $743 million, which will be down 36% sequentially. But what is really important is comparison to last quarter, the year over year, all right? Because this is where you're showing signs of progress, signs of growth, all right? Or at least what do they call it? Consistency into growth, but up 400% year over year. So if this quarter AMC reports that they have at least $743 million that they made as income, as revenue only this quarter, this will be like 4 times what they made the same time this period last year, which will be very, very incredible. Analysts expect also to report a loss per share in the quarter of $0.73, far worse than the prior quarter's loss of $0.11 per share, and better than last year's quarterly loss of $1.42 per share. Remember, it's not about the whole year; it's about quarter to quarter. All right, it's about this quarter compared to last quarter, and also this quarter compared to the one last year. Now, for the full 2022 fiscal year, AMC is expected to post a loss per share of $1.14 compared with last year's loss of $2.5. So even if we look at the entire year, we are still looking pretty much ahead of what could be, what 2022 should be a very, very better, not very, very better, a better year than 2021, which is kind of the point here for me. The point is, AMC throughout these earnings may show signs of what we already know, but what the street, or at least short sellers, are still trying to convince themselves that the business is a failing business. But AMC has tried to kind of diversify all of these investments. Hycroft Mining just discovered a new gold mine, which is very, very, very bullish for this stock and also for this investment as far as AMC is concerned, which ultimately ties to the earnings. All right, so this is a great preview, all right? This is a good preview. If earnings come up being around these numbers, the right thing, the most important thing to look at will be not only the investment performance as far as Hycroft Mining goes, but also the cost, because this is still a company that is, burning cash. But I guess none of that really matters because we all know that this is a stock which the price is doomed to soar. I'm just bringing up earnings because earnings are what we call a market mover. And if the market is not convinced, as we are now, or is not pleased with earnings, especially with a stock like AMC, it can create another huge downtrend. That is what I would expect given what other companies so far which disappointed the street have been performing. Etsy, all the e-commerce chain, PayPal, Netflix, all of those, they've been down significantly. Now, the thing is, That being said, we have to look at something here. With the market being down, almost 15, 12, 24% for all the major indexes, all right? You would expect AMC to be going back to $8, but it's not. Why? Because the market going down and valuations of these high growth tech stocks going down significantly also means that the valuations of the portfolios and the money being managed by some of the hedge funds, some of the short sellers for the clients is also diminishing significantly. So they cannot push this any further down, at least as much further down as you would expect for a stock like AMC. Also, the amount of people still buying, especially now that we are in refund tax coming up into people's bank accounts, I'm pretty much sure that some of the people will take advantage of these low prices in AMC still when these are available, because I don't expect this to stay that far longer in the tens. I may be wrong here, but if AMC earnings are very better than expected, then given what the market conditions are, it can create an additional move from the high growth sectors selling off and people rotating the money into AMC. I'm not expecting a significant flood of money, a huge amount of money getting in here, but at least based on what they show or they will show, it could mean that, hey, the business is on the right track to attract other type of what we call the value investors. And that's what I want to focus on. So let's see how it goes. And then we're going to comment tomorrow morning on a video I'm going to post.